NCBA Group, a public listed company that made 5.1 billion shillings in net profit during the first 3 months of this year. The profit, which represents a 49% growth, was driven by an increase in operating income and a decline in loan impairment charges by 23%.
During the first 3 months of this year, NCBA Group disbursed loans worth 223 billion shillings, which was a 37% increase. This powered the lender's operating income to increase 18% to 15.5 billion shillings. NCBA Group Managing Director John Gashora says, despite the tough macroeconomic conditions, the group's prudent management of credit risk has resulted in an improved non-performance loans ratio and a reduced cost of risk. The lender's provision for credit losses reduced 23% to 2 billion shillings. This helped NCBA Group to post 5.1 billion shillings in net profit, which represents 49% increase on what the lender made during a similar period last year. Gashora says the results are attributable to continued focus on strategic priorities, growth in customer numbers, and improvement in regional entities' profitability. Meanwhile, National Bank of Kenya has posted 117 million shillings in net profit for the first quarter of 2023. Overall revenue increased by 1% for the quarter as the growth in non-funded income was offset by a 14% reduction in net interest income. Customer deposits rose 1.2% to 100 billion shillings, while loans and advances grew 11% to 75 billion shillings. Total operating expenses increased to 2.2 billion shillings, an 11% jump largely driven by increased investments in strategic bank projects to enhance operational excellence and customer experience. During the period, National Bank of Kenya received an injection of additional tire capital from the parent KBC Group that helped it meet the minimum regulatory requirements. Pauline Kihali for Lunchtime News.